Found a property that you want to purchase as a resale to earn an income, but don't have the funds to fix it up to get it ready for resale? Let's talk about that. Welcome to Brick by Brick, Building Homeownership. I'm your host, Suzi Beaver. So you've just started investing and purchasing properties for resale, and you've only got so much capital to use for renovating the property that you're interested in. I've got the perfect solution for you. A fix and flip loan. It allows you to use your capital for the purchase of the property only, so that you're not ending up cash short in the middle of your project or depleting your entire savings account until the property sells. Let's dive deeper into what this would look like as a property investor and using your capital on hand more effectively when building your investor portfolio. To begin with, what actually is a fix and flip loan? Well, by definition, it is a short-term, specialized loan for real estate investors who purchase undervalued properties with the intent to renovate it and quickly resell them for a profit. These loans are very different from traditional mortgages, as they are not meant for long-term ownership. With a fix and flip loan, you can purchase homes that are distressed or undervalued, even to the point of being uninhabitable. The cool thing is that the loan is based on the property's subject to value, meaning after the renovations are completed, not the as-is value that you purchased the property for. Why is this important? I'm glad you asked. It is because now we can put the cost of the renovations into your loan. This way, you can upfit the home with funds from the loan rather than from out of your pocket. We want to identify properties that have great potential after the renovations are complete for resale or even refinance to rent. Hint, that's a whole nother topic that we're going to discuss in a future episode. So keep watching. The next step is to identify what needs to be done to the home to get it up to living standards. That's when negotiations start for the actual purchase of the property. When you can identify what it will cost you so that you know going into negotiations what your total expected cost will be once you are finished remodeling the home. Once the property is under contract, we then will put together your cost for renovation and upfit and create a draw schedule that will all be part of your loan approval. In most cases, you'll be able to cover 100% of the renovation cost and a high percentage of the purchase price of the home into your loan, allowing you to keep your liquid capital in your hand. These loan types are completely flexible in their terms, offering typically 6 to 18 months for the renovation based on what the property needs to upfit it. Underwriting is typically more flexible and faster because as a lender, we are more focused on the profitability of the deal more so than we are the borrower's income and credit history. As I say, if you can't reach the goal, change the path. Sometimes we just have to look at obstacles from a different perspective to see that they actually can be obtainable. Proverbs 16:3 tells us, "Commit to the Lord whatever you do, and your plans will succeed." If you have a goal of growing legacy wealth, property ownership is a great way to accomplish this goal. The fix and flip loan is just another avenue of making your goals come to fruition. Make sure to like, share, and subscribe, and comment down below. You never know who you might be sharing with that could use this valuable insight. Thank you again for joining us on Brick by Brick, Building Homeownership. Until next time, see you soon.